Hello everyone, and welcome to the April 2025 Real Estate Market Update. Who is excited about the White Lotus finale this weekend? Oh my God, we are so addicted to that series. Who's going to be the shooter? Is it going to be Little Lachlan? Is it going to be Mr. Ratcliffe? Is it going to be Chelsea? Who knows? We're going to have a party here in the office. We're doing a finale party. It's going to be amazing, themed food and everything. We're pretty excited. I hope you are as well. But this isn't a plug about White Lotus. This is a real estate market update. And I got a little bit off topic there, but we're pretty excited about this season finale, and so are many of you. But let's get back into real estate. Oh, love these characters. The cinematography is incredible. But I digress. Let's get back into why you're all here. Cinematography aside, we are going to be talking about real estate today, and we've got a new little addition to our logo here with Pospisil Real Estate. We are proudly Canadian owned and operated, and I think that's important these days. We want to be really proud of our country. We've got an election coming up. Things are in flux, but it's all going to work out. Again, I digress. Let's get into the real estate. I know that's why you're all here to watch this. Sales activity. Let's talk about what's happening. Number one, we know that the activity is down from this time last year, but prices are not. So let's get into that. Spring, we're in the spring market now. Globally, there's a lot of things going on, but what I'm sensing, sort of as a summary, is people are sort of moving on with all of their real estate plans. People are selling, people are buying. There's a heck of a lot of demand out there that we're seeing, multiple offers, things going above list. As crazy as it sounds, it is happening. And now with the good weather coming, that's going to be even more pronounced as we get into April. So, detached houses, the sales activity year over year, down 24% from where we were this time last year. That totally makes sense. But prices are about the same for houses in Greater Vancouver since they were this time in early April last year. Now the benchmark price from last month is actually up. So houses did increase almost 0.5%. Month to month from last month. Townhomes, activity's down about 4.6%, nothing dramatic. Prices are about the same from this time last year, and a slight 0.2% jump from last month. And of course, apartment condos, activity's down about 10.2% year over year. Prices are down about 1%, and they increased 1% last month. This is really interesting because you're seeing that market start to rev up a little bit. Okay, now what's hot and what's not? The metric that I use, as you know, to track the activity in the market is called the sales ratio. Oh, that's good coffee. And all the sales ratio is the absorption rate of product that sells every month. So if less than 11% sells in a given month, we are in a buyer's market. There's downward pressure on pricing, and the buyers are out there picking and choosing what they want, getting very good value. If it's between 12 and 20%, we're in a balanced market. We're not favoring the buyers or the sellers. Prices are holding pretty steady, depending where you are in that range. But if we're over 21% in that sales ratio or absorption rate monthly, we are in a seller's market. There's upward pressure on pricing, and we're seeing a lot of above list sales going on, et cetera, et cetera. So this is interesting. Where are we in each product category? Let's pop into detached houses for the west side of Vancouver. First, you can see last month it was pretty quiet, 6% sales ratio. Let's bring up the stats for this month. We are actually up. We're at 8%. So we're inching closer to that balanced market plateau at 8%. currently still in a buyer's market for detached houses, west side. Let's go into condos and townhomes west side. Last month we were at 16%, smack dab in the middle upper end of the balanced market. Let's bring up those stats for the last month. We are now at 19%. So we are in a pretty high end of that balanced market for condos and townhomes in the west side. I'm certainly seeing it. We sold a number of product over the last few weeks, and all of them in multiple offers in the west side here. So that's no surprise. Now, condos, townhomes downtown. Last month, sales ratio was at 11%. Let's bring up those stats. We are still at 11% for downtown, just at that upper end of a buyer's market. Let's go into the east side and look at houses. Last month, we were just at the upper end of a buyer's market at 11%. Let's see if that's changed. It has. We've increased up to 12%. So we've popped in to that balanced market. You see, what's happening here, we're starting to see that activity increase. That shock value of what was going on in February has dissipated and people are starting to move on. So that's good news. So balanced market, Vancouver East Side, detached houses currently at 12% sales ratio. Let's look at condos and townhomes on the east side. Last month we were at an incredible 21% in a seller's market. This month in the stats we're at 20%. Still we're right at that border of a seller's market, but currently at the very upper end of a balanced market for condos, townhomes, Vancouver East Side. Quite interesting. I know you expected those activities to be much lower, but actually they're higher. We are starting to see those marginal price increases as well. Okay, what's happening with prices? If we look at that average price graph for houses, townhomes, and condos, you can see we've had a lot of fluctuation up here. There is our plateau from last spring, and so we're slightly down, probably overall, if I was to give you a number, about 10% from last spring was that last peak. We're about 10% below that. That took place over the summer. Fall was pretty busy, and then a bit of turmoil in the beginning of this year has slowed things down a bit. But the prices that we're getting in the multiple offers, of course, are overcompensating for that, and we are hitting some of those peak prices. So townhomes, again, fluctuating around that peak price, slightly down from last spring. Same with condos. So we're fluctuating near the peak with a slight drop from that peak of spring last year. Okay, if we look at that 5-year trend, I like to look at this for townhouses, houses and condos. You can see there was our peak back in April 2022, and then another peak back in April 2024. As I mentioned last spring, we're slightly down from that, where we are currently from the last month's stats, but you're going to start to see that pop back up again. Okay, let's go to the burbs. It's kind of a mixed bag. If we look at detached houses, month over month variance, again, absorption rates, we're looking at those sales ratios. Where they're green, we've seen an increase in activity, and where they are red, all the ones that aren't circled, of course, we've seen a drop in activity. So overall, I would say the majority have seen in the burbs an increase in activity month over month since last month for detached houses. If we look at attached, we're seeing the same thing. There's a few that have dropped slightly in activity a little further out here. North Vancouver's drop, West Vancouver is of course higher, and of course the Vancouver area is all increasing in activity as well. So kind of mixed, but the majority of them are increasing in activity, as we saw sort of in the different breakdowns earlier. Average price across BC, there's our spring last year. We had that little dip. We've also got a slight recovery taking place, so that reinforces the stats we just looked at. So if we're looking at forecasting, what are we going to look at as our market drivers? You can see when we break these down into the 4 drivers that I follow, if it's green, it's enhancing our market. If it's red, it's a deterrent. And if it's orange, it's in transition. First of all, consumer confidence, that's in a transition because of everything that's happening all over the world. Without going into any detail, you're watching the news, reading the paper, there's stuff going on. But the consumer confidence is actually in transition. I would say it's better today than it was a month ago. There was a lot of uncertainty. Nobody likes uncertainty. The markets don't, buyers don't. But that's starting to dissipate because people are starting to move on. I know some people are directly affected by what's happening, but others aren't. And the ones that aren't are proceeding with their decisions and they are consuming. So that's good news. Inflation, yeah, there's a little bit of increase going on, but it's behaving quite well. We're still in that band of happiness, I call it, for the Bank of Canada. The cost of borrowing is also green because the rates are dropping. Every time the Bank of Canada drops the rates, the variables drop. And now, with our economy softening, I'll get into more detail on this later, those bond yields are dropping, and of course the fixed rates are dropping as well. So the cost of borrowing is green now. That's enhancing the market, and the inventory levels are good. There's a great selection of inventory for buyers to buy, but not too much that it's not impacting the pricing for the sellers. So it's a really good balance. You're seeing a lot of green here, a lot of enhancers helping that market, and that's why we're seeing that recovery. So, consumer confidence, to break it down a little more, I'm referring to the buyers that are out there now as the smart buyers because they know what's happening with the rates. They know there's a good selection. There is an opportunity here for buyers to really take advantage of that market, but don't forget the sellers because all of the sellers that we've helped over the last 8 weeks have done extremely well. Yes, we got to do a lot of marketing. We got to really be bang on in every step that we're taking place, but we're also getting multiple offers and we're bidding them up. So good news all around for all the consumers. Remember, I mentioned last month, I won't go into great detail, but the capital gains tax increase has been delayed till January 1st, 2026. That might disappear altogether. Let's say a few good things about that, because then you still have, of course, the rest of the year to sell your investment properties and be under the old capital gains tax rules. But we do have an election coming up this month, and that might make all the difference. See what your political party's platform is on that capital gains tax. That might help you in your voting decision coming up. So, unemployment rate. No big changes. BC at 6%, Canada at 6.6%, so nothing dramatic changing there. Retail sales. This is interesting. Look at those retail sales taking off in 2025. People are spending. Canadian monthly GDP, now they're about a month behind. Remember, this is pre-tariff GDP, shows healthy increase, but of course that's a couple months behind and that will be changing. If we're looking at rental rates from the rental reports I look at, we're looking about $3.16 a square foot. That's up 0.6%. So that's the first increase we've seen recently on rents. Again, another indicator that activity in real estate is starting to recover on a marginal basis, okay? Starts and under construction, we've got a lot of properties under construction. In fact, I've sold a number of building lots in the last couple of weeks, and the builders are buying. The builders, the developers, they must keep that machine fed to keep the business moving forward. And of course, they're all buying properties because they see this little bit of bad weather we're experiencing now is going to end, and they want to have some new product to sell at the end of that. So there's a lot going on there. And inflation, as I mentioned, when we're talking about inflation, we are now at 2%. And if we look at the inflation, there's Tiff Macklem for the Bank of Canada. He has the Canada overnight target rate now at 2.75%. That's incredible. We've had, of course, 7 consecutive rate cuts. We went from a high of 5% for that overnight lending rate now to 2.75. So that's great news. That's brought those variable rate mortgage costs down. That's setting the stage for much cheaper mortgages. So that's all behaving very well. And if we look at the inflation graph directly, there's the band of happiness, I call it. Bank of Canada likes to be between 2 and 3% for inflation. We're at 2.6, so we're doing quite well. We're in that band. But be prepared with what's happening now with this tariff war. There is going to be some inflation increases taking place. So there'll be that balance. We are pretty well in sync with our neighbors, the Fed. They're at 2.8% inflation. Again, we're at 2.6. And they're slightly down from last month, and we are up from last month. So that's interesting. Again, our overnight target rate, 2.75. They're at 4.33%. So cost of borrowing, as I mentioned, the good news is we're seeing those rates start to drop. And as I went into great detail over the last couple of months, when we have a softening economy, those bond yields start to drop. When the bond yields drop, the fixed rates drop. So not only are we getting those variable rates coming down, we're also starting to see the fixed rates come down, which is fantastic. So that's good news. So if you were to get a mortgage, you might want to go variable open for a while and then just lock in when those fixed rates hit the bottom so you can take advantage of what's happening currently with those lending rates. Does make a big difference, of course, when you're buying. And right now we're seeing 5-year rates, the best deals out there are under 4%. That's pretty good because we haven't seen that for a while. So good news on the lending rates, as I mentioned. There's a graph showing what's happening, the variable being the orange and the fixed being the blue. So we're starting to see drops on both ends. So that's good news. If we go into the buying power for today's cats, as I call it, whenever we're looking at properties, I always like to have a figure in mind. How much does it cost to borrow $100,000? Then you can do your calculations. Today, there's our cat with cash in his hand to buy real estate. We're doing a quick calc using that best 5-year rate at 3.99%, 25-year amortization, and a monthly payment frequency. We're at $527 for each $100,000 borrowed. So if you're borrowing $1 million, you're at $5,270. That's slightly down from last month at $531 per 100K. So that's, again, more good news. Inventory levels building gradually, not dramatically, which is, again, good for sellers. We don't want these inventories to take off. We've got about 60 new homes on the west side of Vancouver. 60 new detached house listings on the west side of Vancouver. And we've gone from 900 to just over 1,000, about 120 new listings for west side condos and townhomes. So a nice, good, steady increase that we're seeing over that spring market. If we go into the east side, we're also seeing a good, healthy increase. We've got about 70 new houses that have come in the market in the last month, and we're seeing about 100 new condos and townhomes. Healthy growth for that inventory to give a good selection for the buyers that are out there buying, those smart buyers. Active listings increasing overall across BC. So again, throughout BC, we're seeing that inventory level increase quite dramatically. What's next for prices? Okay, so let's go into the facts that we know. Our market is impacted by the mortgage rates, the inventory, and of course consumer demand. And those are those factors that we were looking at earlier, a lot of them green. Why is that? Inflation is increasing, but it's manageable and we're still within the happiness band. So the overnight lending rate at 2.75%, that's good news. The rates are low. Inventory is increasing steadily, not dramatically. Of course, we've got a bit of a trade war going on. That's a red X. Buyer demand is strong. Many people are out there buying, from investors to owner-occupiers to first-time buyers to developers. They're all out there buying. Variable rate mortgages are dropping as the Bank of Canada drops their overnight lending rate. And of course, the fixed mortgage rates are dropping because those bond yields are dropping, because that economy is going to soften as we go through this bit of turmoil with our neighbors down south. And the looser mortgage rules, we know they've dropped. We can have 30-year amortizations, and we've delayed that capital gains tax increase, which will hopefully just disappear. And of course, the trade war will negatively impact the economy and undermine some consumers, depending on where you're employed, how you're being impacted directly by this. Of course, that will affect the costs, and of course, that's going to affect inflation. So there's a lot of things in the air right now, but accurately priced properties are selling, and many of them in competition. So in summary, many buyers are taking advantage of the falling rates and the great selection of properties, and sellers are selling. So don't miss out. Don't hide from the market. Carry on with your plans. Do what you plan to do, because it's a great time to do both. That's my market update for April 2025. I appreciate you joining me. You can watch these videos on YouTube, Instagram, and Facebook. And if you're into the podcast, we have it on YouTube as well, Apple Podcasts, and on Spotify. Remember, we are proud Canadians. We're so proud to be Canadian, but we're also very good neighbors. Take care, everyone. Have a great spring.